this company made $100 billion vanish, and no, it wasn't a bank heist. It was something that they did legally until they didn't. Imagine this. You invest your life savings into a top-rated company. The next morning, it's worth nothing. Your retirement funds, all gone. This isn't fiction. This actually happened. Buckle up, because this is the story of how a few overpaid suits tricked Wall Street, scammed investors, and turned lies into stock prices for years. They didn't just break the rules. They made Wall Street throw out the rule book and write them a new one. And the wildest part? Everyone looked the other way. So how did Enron become America's golden child, then explode like a financial nuke? How did executives get rich while employees got ruined? And what if I told you it's still happening today? This isn't just fraud, it's a corporate theater. And we all bought tickets to it. Let's rewind a bit. It's the 1980s. Gas prices are volatile. The energy market's a mess. And into the chaos steps Enron. Born from a merger between Houston Natural Gas and InterNorth, Enron was supposed to be a plain old pipeline company. But then came Jeffrey Skilling, a man with the charm of a politician and the ambition of a Bond villain. Skilling convinced Enron to stop just delivering energy and start trading it, like stocks. Electricity became a commodity, and suddenly, Enron wasn't just a utility company, it was the Wall Street of Watts. People went nuts. Wall Street ate it up. This is the future, they said. Enron's stock skyrocketed. Employees were millionaires on paper. The CEO, Ken Lay, was treated like a messiah in Houston. But here's the kicker. Behind all that hype, Enron didn't actually make much money. It looked rich because of clever accounting, and not real profits. Still, the media called them geniuses. Business schools taught Enron as a case study for innovation, not fraud. They had Super Bowl ads, exclusive golf retreats, and even a fake trading floor just to impress visitors. You heard that right. Fake, like a movie set. Computers with no wires, phones that didn't work. Everything was just a prop. Enron wasn't just a business. It was a brand, a lifestyle, a dream. And dreams, they sell fast. The bigger it got, the less anyone asked questions, because no one wants to admit they're being fooled, especially when they're making money. Okay, now, here's where things get shady. Jeffrey Skilling had a favorite accounting trick: mark-to-market accounting. Sounds boring, right? Stick with me. It's actually diabolical. Imagine you're selling lemonade. You plan to sell $100 worth next month. With this trick, you just say, yeah, I made that money today, and write it down as income. Boom, you're rich on paper. That's what Enron did. They signed 10-year energy deals that might be profitable one day, and immediately reported all the expected profits as today's revenue. Didn't matter if the money never came in. To investors, it looked like Enron was a cash-printing machine. Wall Street was hypnotized. Enron became unstoppable. Except it was all smoke. To hide the losses piling up behind the scenes, Enron cooked up special purpose entities, or SPEs, which are basically fake companies. They dumped bad investments and debt into these shells and kept them off the books. It's like buying junk, hiding it in your neighbor's garage, and telling your guests your house is spotless. Now, Andy Fastow, Enron's CFO and the architect of this accounting circus, he created these SPEs and secretly ran them. That's like grading your own exam and giving yourself an A++. It worked because no one asked questions. Analysts didn't want to lose access. Investors didn't want to spook the market. Even the auditors, Arthur Andersen, played along. Enron had over 3,000 hidden entities. One of them was literally called Chuco, like Chewbacca. Yes, seriously. This wasn't just accounting, it was an illusion. And for years, it worked. Until it didn't. By late 2001, the cracks started showing, but Enron, it was still gunning for the cameras. Until one analyst asked a simple question that popped the bubble. How does Enron actually make money? Skilling snapped. What do you care? Yeah, not a great answer when your entire empire is built on confidence. That moment lit a fuse. Reporters got curious. One of them, named Bethany McLean from Fortune, published a bombshell article. Is Enron overpriced? Translation, hey, is this company just pretending? Then the leaks started. Investigations followed. And suddenly, all the numbers Enron had been flaunting, they didn't just look suspicious. They looked made up. Investors panicked. Stock tanked. And Enron went from Wall Street's darling to Wall Street's disaster in weeks. Employees who trusted the company with their entire retirement savings were locked out of selling their stock, while execs dumped theirs. One woman lost $1.3 million in one day. Meanwhile, Ken Lay told workers to keep calm. What he didn't say, he was selling off his shares in secret. Comment below if this sounds straight up criminal, because it was. Enron's stock plummeted from $90 to under $1. Overnight billionaires became broke. But this wasn't just a company crashing. It was America realizing the system we trust to protect our money, it can lie, and no one will stop it until it's too late. This was no longer just Enron's mess. It was everyone's problem. The collapse was brutal. Enron filed for bankruptcy in December 2001. This was the biggest corporate failure in US history at the time. Over 20,000 employees lost their jobs, health insurance, and retirement savings. Many had invested everything back into Enron stock, trusting the company that promised them the world. Families were wiped out overnight. Dreams, homes, retirements, all were gone. But guess who walked away rich? The execs. Skilling cashed out millions. Fastow had raked in even more. Lay, he blamed everyone but himself. Arthur Andersen, Enron's accounting firm, and one of the Big Five got caught shredding documents. Literally. They were later convicted of obstruction of justice and went out of business. Everything just vanished. The public confidence in corporate America was shattered. Congress scrambled to clean up the mess, and the result? The Sarbanes-Oxley Act, aka Please Stop Lying on Your Financial Statements law. It forced companies to be more transparent and held executives criminally responsible for cooking the books. But let's be real, fraud didn't stop. It just got sneakier. Skilling got over 24 years in prison. Fastow did 5. Lay died before sentencing, avoiding justice entirely. And the people who really paid the price? The employees, the investors, and the pensioners, everyone who trusted that Enron was the real deal. Enron wasn't just a failure, it was a warning. So what's the lesson here? If something looks too good to be true, especially in business, it probably is. Enron didn't just fake profits, they faked trust. And when trust dies, everything else falls apart. This story isn't ancient history. Versions of Enron still exist today, just wearing shinier suits and flashier logos. The next time someone tells you a company is revolutionizing the market, maybe ask, how? If this opened your eyes or your jaw dropped at any point, smash that like button and drop a comment which part shocked you the most. And hey, if you want more wild stories like this one, corporate scams, financial secrets, the stuff they don't teach you in school, hit subscribe and check out the other videos on this channel.